CFA Society Nigeria and the Financial Modeling Institute. So I'm David Brown. I'll be co-hosting, and I would like everybody that is currently called Gloria, you need to do something because there was just a small error in the way we set it up, and that's why we had this delay. So sorry for the delay, everybody. And I would like you to click on the 3 dots next to Gloria, the name Gloria, and I want you to change the name to your name. If you could do that for us, that would be great. So click on the 3 dots and thus change the name from Gloria to your name. Can we quickly do that? I can see Mohammed, thank you very much for doing that. I can see you change the name. So everybody, let's do that, please. You click on the 3 dots and then change the name to your name. Sorry about the mix-up. Great, great. Let's change the names, 3 dots, and then change the name to your name. Great, let's do that. Let's do that. Excellent, excellent, excellent. So while you're doing that, I'll quickly introduce the webinar. So this is Financial Modeling Best Practices, organized by the CFA Society Nigeria in collaboration with the Financial Modeling Institute. Financial modeling is a discipline. A good model needs to tell a story and create confidence for the users and decision makers. Unfortunately, many financial models are a mess. Financial modelers are often self-taught and left to figure out things for themselves, often wondering if there is a better way. In this webinar, Schnoor, Ian, I'm not pronouncing your name right, sorry, Ian, will review a better way to do this. Now, during this session, he will present and discuss some critical tools and skills referred to building a best-in-class financial model that inspires confidence and leads to optimal decision-making. Specific topics will include the discipline of financial modeling itself, top 10 modeling best practice, key modeling tips, skills to check a financial model, great modeling technical skills. A little bit about Ian. Ian is a CFA charter holder, is the executive director of Financial Modeling Institute. Ian is a principal and founder of the Marquee Group, a leading provider of financial modeling training to professionals in the financial community. Ian has built the Marquee Group into a leading provider of financial modeling training, consulting, and accreditations. Ian is also the executive director of the Financial Modeling Institute. In this role, he works closely with the entire Financial Modeling Institute team on the creation and execution of the FMI's strategy. Over the years, Ian has taught thousands of business professionals and university students in Canada and the United States, and also the United Kingdom, Australia, and Mexico. Ian is passionate about teaching and brings a hands-on, interactive approach to every course. Ian teaches at Queen's University and is a past recipient of the Instructor of the Year Award in the Master of Finance program at the Smith School of Business. Prior to establishing the Marquee Group, Ian spent a number of years in the investment banking department at Citigroup and BMO Capital Markets. Ian completed a Bachelor's of Commerce honors degree with academic distinction and has also attained the CFA designation. So let's welcome Ian, who is going to really share his wonderful wealth of knowledge with us. I can't wait to hear what Ian has to say. Over to you, Ian.
Can you hear me okay, David?
Yes, I can.
Awesome. Can everyone hear me? And Julian, you're there. Well, thank you all. Really very, very excited to be here today. And I'm going to just start with a very quick intro of the seminar, and we're going to jump right into it. We're going to move very, very quickly here. I've got lots of stuff to show you. And we're going to get in. So first of all, a big thank you to CFA Nigeria, CFA Society Nigeria, and Gloria and Frank for bringing us in. And my friend David Brown. David and I have had a chance to meet many times over last year. So it's great to see you again, David. Thank you for hosting and for your very warm introduction. I actually kind of liked that everybody's name was Gloria. I've never seen 1,000 people named Gloria before. So I was enjoying that, but if you want to use your real name, that is also that is great. You know, I was amazed at how many people they told. Gloria and Frank told me yesterday how many people have signed up for this, over 1,000. As David said, I've been teaching financial modeling for almost 20 years, and I've never taught to over 1,000 people before at one time. So I asked them, are they sure that everyone knows this is financial modeling and not fashion modeling? But in fact, they told me that you did know it's financial modeling, and I'm excited to have all of you here with me today in this session. And I'm actually not surprised, because financial modeling has become maybe the most important skill and discipline in the world of finance and accounting and business. Is so critical if you're going to work in business and finance, to have a good sense of financial modeling. And as a result, I'm really thrilled that you're all here today with me. Julian, you're here. Can I hear you? I can't see you, Julian. So you just let me know that you can hear me okay. Might need to key in on you. One of my colleagues, Julian, is here with me as well from the FMI.
Yes, I can, Ian. You sound great.
Okay,
hi, everyone.
Perfect. Julian is with me from the FMI. Fantastic. So let me just quickly tell you a little bit of history in the background. So as David mentioned, I started a training business many years ago called the Marquee Group, and we mostly run training in financial modeling in North America. But I want to say hello to some of my friends in Pakistan. I was out with CFA Society in Pakistan last year running some training as well. And that's what we do on that side. But one thing we noticed many years ago is that a lot of people would take a financial modeling course, and then they would put on their CV or their resume that they took a course from some firm, maybe from David's firm or from our firm, and everyone would write down that they attended a course. But the problem is, it's not very helpful to say you attended a course. That doesn't tell an employer much about your skills. And we realized that there was a real need in the world to establish a global standard and a very rigorous, challenging test for financial modeling. So a number of us around the world in financial modeling established around 4 years ago the Financial Modeling Institute. It's an independent body with an independent team, and we call it the FMI. And the only thing the FMI does is it creates and administers very rigorous financial modeling exams. And when people pass the exam, they truly can indicate to their teams, their colleagues, that they have excellent financial modeling skills. So there is a website. You can see the link at the bottom here. It's the fminstitute.com. I'm not going to spend any more time talking about it. I'm going to show you the website here quickly. I assume you can see that, right, Julian? You can just give me the thumbs up or say yes, but that works okay? Yep, good. So feel free to check that out. You can see what we do, and we'd be more than happy to chat with you after about the level of testing to truly prove people's financial modeling skills. So what I want to do today, and I'm going to move it very quickly. We've lost a little bit, but I'm going to try and go in the next 70 minutes or so, 75 minutes. And we've put together this presentation on financial modeling best practices. Now, a couple of things. As I said, I'm going to move quickly. If you have questions, maybe put your questions into the chat. Indicate your question in the chat. My colleague, Julian, will interrupt me at times, or I'll ask him if there's any questions, and I will try to address some of them. But there's such a large number of you that if you have questions, what we might do is collect all of them and then put together a summary note and send out that note to everybody after the session is over. The other thing I will mention is that the session is being recorded. So if I'm going a little bit quickly, or if you can't watch all of it, please come back and watch the video again so that you can see it again and think about all the things I'm talking about. The last thing is, I will be showing you some slides, some presentation slides, and I will be showing you a model in Excel. Both of those tools are going to be sent to you after the webinar. So you're going to receive the slides, and you're going to receive the financial model that you can use as well. So you're going to get a bunch of resources after this as well. So let's jump right in.
Just a second, can I just step in for a second? Please, yes. I just want everyone to know it's a full house.
I'm dropping, you're dropping.
So anyone that can connect, you can watch what's going on Facebook. Can you hear me now?
You're a little.
Hello, can you hear me now?
You're a little choppy.
Okay, go carry on, please. Carry on. I'll put it in the chat.
I think he's saying that it's a full house, so people can't come in. It's 300 already maxed.
Yeah.
So anybody that can come in, you could watch live on Facebook.
On Facebook.
So I'm wondering if they know the link for the Facebook, but that's fine.
Thank you, David. I think it's the CFA Society Nigeria Facebook page. So if you're on and your friends can't get on for some reason, you can let them know that they can watch it on, I feel like an professional athlete or something. There's so many people trying to get in. It's excellent. But you can watch it on Facebook, or you can just remember the video will be available afterwards as well. So let's jump right in here. This is the welcome slide, and here's some of my contact information. You're welcome to email me or be in touch with us if you have questions after. Don't be shy, guys. Modeling is a passion of mine. You're welcome, and I know of David's as well, but you're absolutely welcome to email me afterwards if you have questions, if you wanna chat. So this was page 3 was just the agenda that David mentioned, and then here's some more information about the FMI. You can read about the FMI on your own time. I'm gonna start with some general best practices, and then I have a list of top 10 modeling tips, and we're gonna review those top 10 tips throughout this presentation. So let's start here with this first page, page number 7. And what it says is that financial modeling is a discipline. And I truly believe that in the next number of years, people are going to be speaking about financial modeling as a discipline, almost in the same way that people talk about accounting or modeling. The way people talk about accounting or finance, people will refer to modeling. Modeling is its own discipline. Modeling is a very multidisciplinary skill set. And as David mentioned, part of the reason why models often don't work very well is that no one's been taught. Historically, nobody was taught formally how to use financial models. So let me put a couple of notes here on the screen. And hopefully you can see this now, Julian. I'm into Excel. Is that right?
Yeah.
What we jot down here is this. A simple question that I always ask in a class is, what is a financial model? If anybody ever said to you, what is a financial model? And you had to answer that question, people always stumble and they wonder how to answer it. Well, I would say very, very simply that it's simply a forecast. All we're trying to do in a financial model is build a forecast for a company. We're trying to forecast usually the next 5 or 10 years into the future. So then the question is, why? Why do we forecast? Well, I will tell you that right now that models have become the most important decision-making tool in finance. In all of finance, the most important decision-making tool is our financial models. All sorts of decisions that people make in business are based on financial models. So what types of decisions, obviously? Well, we're making decisions about valuation. We're making decisions about investments. We're making decisions about mergers. We're making decisions about operations. Companies use their forecasting tools to make operational decisions around staffing and hiring. People use their models to make credit decisions. A lot of credit bankers want to know if a company can handle more debt capacity. We use models to determine risk and think about risk. So my point is this: we use financial models to make a wide range of decisions. And the big problem is that, as David mentioned earlier, and we say this all the time, most financial models are a mess and they don't work very well. People struggle like crazy with their financial models. So that's part of what we do at the FMI is when people write exams and we grade them, we try to make sure that their exams are beautiful and organized and clean. Because what we always tell people is that a model needs to tell a story. It has to communicate a story about the company or the situation so that you can make an effective decision. Now, it should be very simple. All we need to do in a model is take the company's historical financials. Imagine you're going to take last year's actual financial statements and forecast them into the future, make a projection. So why is it so difficult? Why is it a mess? Well, there's a lot of elements. I'm going to go back to my slides for 1 second here. The reason is because to build a strong model, you have to have a lot of different skills. You need some good Excel skills. You need some good skills in design. I will tell you the number one reason why financial models fail is because of poor design. They're not well designed and organized. So I will try and focus over the next hour on some critical ideas regarding design in a model. You have to understand accounting. Now, I'm not an accountant. I'm guessing some of you might be accountants. You don't have to be an accountant, but you need to understand the way all the numbers talk to each other to build an integrated set of financial statements, including things like subsidiary accounting or tax accounting. And you need to know how the lines talk to each other on the company's financials. You have to understand finance. And our job is to pull the whole thing together into one clean, organized tool in Excel, our model. So the last thing I will tell you here before we move on to our list is this. One of the messages that I always tell people is this. A good financial model needs to work two different ways. So if you guys have ever done any forecasting, if you guys have ever built a model before and projected a company, how do you know if your model is working well? Well, there are two criteria, and everything I'm going to talk about today has to come back to these two criteria. How do you know if a model is working? Well, number one, a good model needs to work electronically. What that means is every formula needs to make sense. If I built a financial model and I emailed it to you, guys, you should be able to open up the model on your computer screen. You should be able to click on any single cell in the spreadsheet and understand exactly what that cell is telling you. It should be clear. You should understand every single formula easily, and that doesn't happen all the time. Has this ever happened? Can you guys think if this has ever happened to you? Have you ever opened up a spreadsheet in Excel, clicked on a formula, and the formula was so long that it wrapped around and around and around? You've seen that before, haven't you? We've seen that. We see that all the time. That's not optimal. That should never happen that way because it's not clear. People can't follow and understand. So a good model has to work well electronically. But I would also say to you that a good model needs to work well on paper. What that means is you should be able to take your model, print it and staple it, and feel like you've just given somebody a presentation. Because the model has to create confidence. And as I said, it has to tell a story. So it has to be clear. Someone has to be able to read it like they're reading a presentation. I'm going to put a note here. It needs to feel like a presentation. Guys, sometimes people will look at our models and they'll say to me, did you build that in PowerPoint? No, of course not. It was built in Excel, but we need to make people feel like it's a clean, organized presentation. And if you can do that, you will have a very strong, effective model. What I'm going to do is quickly show you the model that we are going to be looking at today, but I'm going to show you a PDF version of the model before we look at the Excel version. We can see this. Hopefully, Julian, you got the PDF model here?
Yep.
So guys, this is a financial model that you're going to get access to. It's called the Henderson Manufacturing Model, and I've opened it up as a PDF, as a PowerPoint. And I'm just going to very quickly, imagine you printed this out and you showed it to your client or your boss. It should feel like this. As I quickly flip through it, I have an executive summary page. I have an assumption page and another assumption page, but I could print this. I have a scenario page. Every single page is clean. It's clear. It has titles on it. It has page numbers. It's clear. You notice we've used consistent formatting, consistent number size. I have a cost page, a revenue page, a cost page. Here's my income statement. But I hope you would agree that if you printed this and handed it in, someone's going to feel confident. And I can tell you that doesn't happen all the time. Many people struggle to make a PDF version of their model, or they struggle to print it. It's a huge mess. There's no way to print it. But you need to make people feel confident in your work, and this will happen if your model can be printed or turned into a PDF. So we'll talk about how we do that over the course of the next hour. So let me go back to my Excel. I'm going to go back to the presentation slides here for a moment, and let's look at a couple ideas, and then I'll stop and see if there's any questions. On page 8 of the slides, you'll read this on your own, guys. It talks about model discipline. The very first note just says a model has to be a powerful communication tool. Make sure that people can read it and feel comfortable with it. So it has to be dynamic and flexible, printable. I talked about this, transparent. If you do that, you are going to be head and shoulders. You're going to be well above what most people do in their financial models. As I've said here, a strong model will create credibility and inspire confidence. So how do we get there? We need to keep things simple. We need to keep things simple to get there. And so when I say keep it simple, that means simple formulas, simple design, simple logic. We need to make sure that everything is, that doesn't mean simple ideas. We can use more complex ideas, but our techniques have to be simple so people can follow. One of the key things to keep it simple is to avoid hard coding. And I'm going to show you that in the model when I get into Excel. Never hard code. Never, never, never hard code in a spreadsheet. What that means is never build a formula like this. If you look at this formula here, guys, on my screen, it says equals a 5 in the middle here, equals a 5 times 0.025 plus 4.9. Can anyone, has anyone ever seen a formula like that? I'm sure you have. We see it all the time. What does it mean if you build a formula and you put plus 4.9? Does anybody know what that 4.9 means? In a webinar last week, somebody tried to explain it to me. But of course you don't know what 4.9 means. It's a hard-coded value. Somebody told you that there was going to be a $4.9 adjustment to a certain cost, and you typed it right in. You can never do that because nobody will understand what it means. This 4.9 should be in its own separate cell as an input cell and then used in a formula. And one of the key ideas in modeling that I'm going to show you when I get to Excel is that we need to separate, we need to use a different color coding for input cells versus formulas. You might have seen in my model here, I'm back to my model in a second, right here. You can see this, hopefully, thumbs up, Julian, or you can see the model height, hopefully, yeah. So anything that's an input cell in a model should be a blue number. So you know if you come to a model and you see blue numbers, these are inputs. You can play with those, you can change those. Whereas anything that's a formula should be black. That's a really critical industry standard to make sure people know what they can play with and what they can't. So let's now move to a list of top 10 modeling best practices. I have these in the slides, guys. I have these in the slides on page 11. I'm going to review all 10 of these over the next 50 minutes. Top 10 modeling best practices. And I'm also going to show you what these mean in the financial model. But in order so I don't have to jump back and forth between my PowerPoint and my Excel, I'm going to go to my Excel right now, and I'm going to show you the same best practices right here. Julian, we can see them here, the best practices if I jump back and forth. Okay, excellent. So here they are. Guys, I hope that after the next 45 or 50 minutes, if we can review these and talk about them, and you watch this video again, maybe a couple times, this will help you understand what makes a really powerful, strong model. Julian, I'll stop right now just for 2 seconds. Are there any questions that I should be addressing or answering at this moment before I get into the top 10 tips?
There are a couple. I know some you'll cover later in the presentation. One that I just want to make sure you flag. Someone has mentioned that infrastructure models with PP modes get very complex. And if you had any input on that.
Yeah, it's a great comment. So, you know, people say that to me all the time. They say my infrastructure models get very complex. They say our mining models get very complex. They say, well, I work in oil and gas. Oil and gas models get very complex. And very often, so you're right. What makes infrastructure models complex is two things. There's often timing flexibility needed in infrastructure models. So there is some complexity in infrastructure models around when things are going to happen. I won't get a chance to get into that today, but if people have If that person wants to, send us a note separately, there are a lot of things we can do to simplify timing flexibility. In infrastructure, we're often looking to build a model for a new development, sometimes a new infrastructure project, and there's often timing issues, timing delays, and we have to be able to change when things happen. So there are ways to make that simpler. The other way that infrastructure models get complex is around debt and being able to force the debt into a certain optimal capital structure. We call that debt sculpting. So there are elements that get more complex, but I will tell you, most of the time when people say their models are complex, it's because their formulas are a mess. Most of the time people confuse detail for complexity. 9 times out of 10, when someone says my model's really complex and we look at it, we'll say, oh, I know what you mean. Your model's actually not complex. Your model's detailed. You have a lot of detail and you built it in a very inefficient way with very long, crazy formulas, and it feels complex. But actually, using some of the techniques we're going to talk about, there are ways to simplify. Every model we've ever looked at can be simplified. And yes, there are times when there is an area for complexity, but not everywhere. We can still generate a lot of simplicity, even in infrastructure models. So let's take a look here at a couple things. I'm going to go through these probably 2 at a time. The first thing I will do, and I like the question, I'm going to use the question as I get through these tips. The first 2 tips I want to take away, talk about are number 1 and 2. Plan and design a model and ask the right questions. And what I would say is this, maybe the most important, and I know David preaches this in his own. David's firm, by the way, D. Brown Consulting, is one of the approved training providers for the Financial Modeling Institute. There are 20 or 30 training firms around the world that offer training to help people learn modeling, and D. Brown Consulting does a very good job of that. And I know I've talked to David. David shares this view that I'm going to tell you now. Maybe the most important part of any modeling process has nothing to do with Excel. And what I would say is it's critical to have a strong plan. It is critical to have a strong plan in a financial model. And what I would say is this, take 30 minutes, 45 minutes, an hour. Every time you build a model, first make a planning document. In our team, when we're doing that, we call this a scoping document. And what that means is, what do I need to do? Think of it like a blueprint. Think of it like the blueprint for an architectural project. If you were ever going to build a building or some sort of a physical product, you would build a plan. You would make a blueprint. You would have a set of instructions. And yet when it comes to a financial model, people often don't do that. Usually I can tell, guys, I've built over 100 models myself. I've looked at thousands of models. When I look at models that are a mess, I can usually know within 2 minutes whether the person built a strong plan or whether they did not have a strong plan. Imagine if you built a house or a building, guys. Imagine you built a big building with no plan, no blueprint. It would be a mess. And that's what it feels like when we often look at models, that there was no planning that went into it and it doesn't work very well. Very, very quickly here, in the presentation slides, I have to do something every time I jump back and forth, but in the presentation slides, just so you're aware of this, when you go to page 12 and page 13 of the presentation slides, you're going to see this on your own. There are some steps to follow to build a strong plan. But what I would say is the purpose of planning is to ask a bunch of questions like, what's the purpose of my model? What decisions are we trying to make? What assumptions do I need? Do I have enough detail? What are my metrics on the outputs? All these questions we need to think about up front. And what I will tell you here very quickly is that there are 3 components. There are 3 components of the planning process. You don't have to do it exactly this way, but we find this a very effective way to plan a model. Think of it in 3 major components. Number 1, I would think about, determine the major issues. And in corporate finance, we will often say these are the key drivers. And so start, when you look at your company, whether it's an infrastructure asset or a mining company or whatever company it is, think about what are the key drivers. What does that mean? Well, the key drivers are the most important, most critical assumptions that will impact the success or the failure of the company. And what we say about these variables is that they are usually very hard to forecast and hard for management to control. Hard to forecast and they're hard to control, but they can have a huge impact on the success or failure. And what I will say to you is we will treat these variables in a special way in our model so that we can play with them. As an example, for an oil, let's think of an example for an oil and gas company. I know there's a lot of natural resources, of course, in Africa, of course, a lot of natural resource, a lot of mining companies, a lot of oil. And so as an example, if we're thinking about an oil and gas company, obviously, one of the key drivers that management can't forecast with perfect precision would be the price of oil. What do we think the price of oil for the next X years? Is that 5 years, 10 years, 20 years, whatever you're forecasting? What do we think the price of oil? Nobody knows exactly what the price of oil is going to be or the price of gold. So we're going to want to have multiple options. What else is a really critical issue that impacts oil and gas companies? Obviously, things like exchange rates. Because oil, like most global commodities, is priced in US dollars, but then it gets converted back into local currency because companies are based around the world. So exchange rates are not easy to forecast with accuracy. So the point is there will always be issues, maybe things like cost inflation. So when you're building a model, you need to say which variables are the ones that I'm going to have a very hard time forecasting. Those are the key drivers that we need to treat separately. Then what I would say is step 2 is make a big list of all your inputs and assumptions that you will need in the model. I'll show those to you in the model. And finally, think about what will be on each page once the model is done. What I mean by that is plan it out like you would a PowerPoint presentation. I bet you a lot of you, I'm sure a lot of you build presentations, PowerPoints. And I'm sure that when you build a PowerPoint, the first thing you do is you ask yourself, what will be on each page? What do I want on page 1, page 2, page 5, page 10? You make a table of contents and then you plan it out. Do the same thing for your model. People don't usually do that. What will be on every single page? And if you do that, then once again, like the model I showed you a minute ago, you'll be able to think about what do I need in my model? What should be so that I can present it to my client, my boss. So as I go back to my best practices, I promise you, if you do a good job planning your model, making a strong plan and asking good questions, you will already be way ahead of what most people are doing. Can I tell you what the role is of the modeler? The modeler's role. The modeler's role is often a lot more important than people give it credit for. I would say it's the modeler's role. The person building the model is not just to create a giant calculator in Excel. People sometimes think that a modeler is the person who sits in the corner building out a spreadsheet for hours and hours and hours a day. That's true, but that is not the sign of a truly sophisticated, intelligent modeler. I will tell you that in most modeling projects, the time working in Excel is usually only approximately 50%. When I'm building a model, when you build models for clients, I mean, it's not exactly, but when you're building a model, you're not spending 99% of your time in your spreadsheet working in Excel. Maybe only 50 or 60% is working in Excel, or 70. But a lot of your time, is spent talking to people, your clients, your boss, understanding what needs to happen, thinking about the assumptions, challenging people, asking them where they're getting their information from. What do we want to use for oil and gas pricing? What do we want to use for inflation? And really understanding the business. So a good modeler truly understands all aspects of the business or the project. And that only happens when you take a view that your role has to be to challenge, to ask good questions, and to get involved. And if you do that, you will capture the first couple tips here right away. So we haven't even talked about the Excel yet, but this is critical. Let's get into the next two then, takeaways. The next couple tips that I want to show you are as follows. It says, keep the assumptions up front in a model and then make them blue. I already talked about this. Make them blue and keep them up front. Let me show you the model here for a second. I'm actually going to go to the model which you're going to have access to. Here it is. Here's the actual Henderson model in Excel. And as I said, you will be sent this model when our presentation is over. I'm going to talk about tab structure in a few minutes. I'm going to get to the structure, how you organize your tabs and the setup in an optimal format. But what you can see here, guys, in the model is, first of all, if I was to do the whole thing, if I was to look at the entire model, the first thing is we have a cover page. And you notice that I'm in my print preview mode, but you'll notice the very first thing is a cover page. Most models do not have a cover page. Why is it nice to have a cover page? Well, because you want to think of your model as a presentation, and it just communicates quickly who built the model, what date, who's it for. You can communicate some key information and immediately tell people that this is a presentation. So in a good model, we often show people a cover page. And then the next thing we like to show people is an executive summary. The executive summary will always be different for any model. But what this does is right up front, it tells people what's the answer. So I will tell you that if I go back to my notes for a second here, and I'll tell you why I'm coming back to this, the order for a good model, if you're thinking about kind of the order to present information, your information in a good model usually follows this logic. It's nice to have a cover page because that tells people what company, what project they're looking at, what version, what date. It's always nice to include an executive summary up front, and this needs to be customized for every model. So I don't know who asked the question about infrastructure, but it was a very good question. If I was working with you and we built an infrastructure model, our executive summary would look different than if it was a brewery or if it was a mining company. But you need to have an executive summary because the executive summary says, it tells the client, this tells the client what's the answer. That's the first thing that they always want to know. What's the answer? But the next thing that's really critical to include in a good model is assumptions. Right after that, and you can see here, if I go back to my model, the first thing I show people is an executive summary, and the next thing is all of the assumptions, all my blue inputs on things like the operating costs, interest rates, depreciation. This is a simple model because it's a simple company and a simple model that we use to kind of communicate a simple business. But I could show you, I mean, if I showed you some of our complex models that are 100 pages long, they look exactly the same. They're longer, but they look exactly the same as this. I have my assumptions. You can see as I roll down, all of the assumptions are right up front on things like cost adjustments. I have assumptions on capital expenditures in the model. What's the capital expenditure going to be? Working capital. So the big question is, why do we need an assumption section up front? I will tell you, many models that I've ever looked at do not have an assumption section up front. They just do not have any assumption page up front. So let me ask you, I will tell you here, many models do not have an assumption section up front. So where do you think people put their assumptions if they don't put them all up front? And I will tell you, if they don't have an assumption page, then the assumptions are scattered everywhere in the model. Everywhere you go in the model, in hundreds of places, there are inputs and there are also formulas. What's the problem with having your inputs and your assumptions scattered in 100 places in the model? Makes it very difficult to update the model. So I will tell you here, if assumptions are scattered, if the assumptions are scattered in the model, then number one, it's very hard to make changes to the model. And number two, it's hard for the client to read and understand the model. Because I promise you, this has happened every single time we've ever presented a model. I promise you, if you ever show somebody a model, the first thing they will want to know is, what's the answer? They always want to know what's the answer to the model. So you show them the executive summary and that tells them what's the answer. But I promise you, the next thing people always want to know is, how did you get there? How did you get the answer? What decisions did you make? So it's really nice to show all the assumptions up front next, so people understand all the decisions around depreciation, around costs, around taxes, around the operations. Whatever your decisions are on, these were your decisions. And then I will tell you right now that it is very easy to build the assumptions page in a model if you first made a strong plan. If you did a good job planning your model and thinking about what do you need, what information do I need, then it's very easy to take your planning document and turn that into a set of assumptions. And that's the order we're going to think about next. So I'm going to show you now a really neat Excel technical tip I want to show you here quickly. So I've told you that it's really nice to keep the assumptions up front and to make them blue. Now we know why. So why do we want to keep them up front? So that so clients can read it, you can present it and people read it, and you can update your model very quickly because everything is together. But I will tell you that sometimes when I show people models and I talk about modeling, people sometimes say to me, they'll say, you know, Ian, I understand that, I get it, I understand what you're saying, but they'll tell me, I'm going to go in my model and I'm going to go down for the revenues and costs. I'm going to go down to my income statement. Okay. Everyone can see here my income statement. And people sometimes say to me that they like to have assumptions right on the financial statements so that they can see what that might do to net income. So for example, they might say to me, I want to—
Hi, Ian. I don't believe you switched windows to your Excel model.
I'm sorry. Excellent. Thank you, Julian. I'm back in the model. Thank you very much. So I'm going to go, thank you. I'm back in the model. Thank you. So I'm back in the model. Thank you, Julian. I'm in the model and I'm on the income statement on the model tab. And I will tell you that some people will say to me, Ian, I like to type in numbers right on the financial statements so that I can see what that's going to do to my earnings, my EBITDA, or my net income. So if my cost of goods sold changes to, let's say, 190, if I type that in, let's say here as an input, I can see right away what that does to my net income. But the problem is it creates a huge mess. So how do we, so what are some great skills? I'm going to show you two great skills here. I don't think I went back yet, did I? Thank you for flagging that for me. So there are two great ways to keep assumptions up front, but also to see what that does to the outputs. And I will show you a couple neat ideas right here. So there's nice, so we're going to keep our assumptions up front, but I want to know what that does to some critical outputs in the model. Number one, I'm going to say build a simple outputs box directly on the assumptions tab. This is a simple idea. So if I go back in my model for a second here, Julian, we're good. Thumbs up. You can see the model, I hope. Okay.
Yep.
Yep. So for instance, I have my assumption page. One very easy idea that people like is as follows. What if I went down to the bottom here and made, what if I went down to the very bottom of my assumption tab and I built another box, and this box said something like key, I said something like key outputs, okay? So I can say something like, what are some of the key outputs in the model? For instance, maybe I wanna understand on the income statement, what's happening to EBITDA, and I wanna understand what's happening to net income. Very simple. Maybe you want to add some balance sheet items or some cash flow statement items, whatever it is that you want to look for, it doesn't matter. So I'm going to simply now, and it's a simple idea, but what I'm trying to tell you is a lot of good modeling ideas are simple. It doesn't require crazy technology. All I would need to do now is go back in and link. I can link up in my forecast here to EBITDA, and I'll copy that over. I will also then link it up to net income, and I'm going to copy that over. So literally all I did here, guys, very simple, is I'm repeating. So if I want to change, for instance, if I was going to change something in my assumption page above, I could see immediately what that does. So for instance, if I change my capital expenditures, does capital expenditure hit the income statement? No, of course not. But if we increase capital expenditures, we might need more debt. And if we have more debt, that might have more interest. And a more interest might reduce net income. Let's test this theory. What if capital expenditures was going to go up to $100 or $150 million? We're going to invest in a huge new asset. Do I need more debt? Let's see here. Maybe I do, maybe I don't. Well, as I expected, look, my EBITDA stayed exactly the same. My net income dropped by $4 million. It went down by 4. I'll do that again so you can see. My net income was 30 and it dropped to 26. Let me go back and change the capital expenditure once again to 150. EBITDA stays the same, net income dropped. That tells me that interest expense must have gone up and dropped net income. My point though is I can make some changes right here to my inputs, and I don't have to go anywhere else in the model. I can see the outputs right here on the screen. That's one little idea to allow you to see what's happening in your model. The other way, which is a tool that most people, I'm going to show you a tool now that most people have never seen. There's a really good tip in Excel called use a really neat tool in Excel called Excel's watch window. Are you seeing my screen, Julian? It says pause.
No, not at the moment.
Okay. So resume share. Are you seeing it now?
Yeah.
Okay. Thank you. So watch this, guys. There's a really great tool in Excel that you can go to here. I need to slide some Zoom stuff out of my way here. If you go into your Excel menu, and I believe it's on the Formulas tab, somewhere in your Excel, and in mine, it's on my Formulas tab. It's a little different in different versions of Excel, but I promise you this feature is in your Excel. You may have seen it before and never known what it does. There's a really great tool off to the side here called the watch window. Watch what happens when I click on this. When you click the watch window, you get this box. Can you see the box, Julia? Does that pop up?
Yes.
Yeah. And what it allows you to do is watch something deeper in your model. So I'm going to say add a watch, and I'm going to make this box a little bit bigger. And I'm going to say, let's watch, and it says add. I'm going to click on the model screen, and I'm going to move over here to my net income, let's say, and I'm going to select 5 cells. I'm going to select just my net income, KLMO, and I'm going to click OK, and look what happens. Now, in this separate window that's popping up above my screen, I have a watch window and it's showing me what's going on. So maybe you don't want to include, a separate output box on your screen. Maybe you don't, but maybe you like this idea of having a watch window. So what I can do with my watch window is it's showing me what's happening to net income. So as an example, if I go back here and I change my capital expenditure once again, I can see what's happening deeper in the model. I can see what's happening to various items in my net income, and I can watch very carefully. I could add another one. I could add EBITDA. I could add revenues, whatever you want. And then you could turn it off and on. You could close this and only open it whenever you want it. So it's a very powerful way and a really great tip in Excel to allow you to show your assumptions up front, but allow you to see your critical results at the same time. Let's move on now. Anything I should stop for at this point, Julian, before we continue on?
Yeah, that would be awesome. So there's the cover page and the summary. I think while you were speaking to it, I don't know if it was showing. So we got a number of questions of candidates wondering what should go on a cover page and what should be in a summary page.
Excellent, thank you. Thank you for asking, and I appreciate that. Let's go back then and talk about that very quickly, and then we'll move on. So let's, because we've gotten through the first four, we'll go through the rest here quickly. If I go back to my model, let's see here. Are we, actually, I'm going to stay in my notes, okay? I'm going to stay in my, are you seeing my notes file, Julian?
Yeah.
Okay. So what
they would like to see the summary. They actually didn't see it. So you were in your notes when you were talking about it. So they want to see it in the model.
Okay, awesome. Thank you, David. I'll show it in the model, and then I'll talk about what's a good idea to have on a summary and a cover. So let's go back in the model then. What's a nice thing to include on a cover page? So here's the cover. And again, if I was to print it, I'm going to go to my print. I'm actually going to go to my print preview mode so you can see what it would look like if it was printed. What's a nice thing to include on a cover page? Keep it simple. Maybe include a logo for the company. Maybe include the name of always the name of the company, the date, maybe put your name, maybe put your email address or your, how people can reach you, maybe the version number. There's no perfect answer, but I would say, think of it the same way you would as the cover of a PowerPoint presentation. It needs to communicate some key information about who did it, when, what the company is, what the version is, and that will create confidence. Make it look nice, whatever you like. In this particular model, the executive summary includes only a few things. It's one box, and we kept it simple. We have some historical and forecast information just for revenues, EBITDA, net income, but there are 3 boxes because in this model, we did the, sorry, I'm going to show it to you differently. Julian, you're seeing a print preview of it now?
Yes.
You can see I did the same thing 3 times. So I'm running it with a base case, a best case, and a worst case. I'll go back in. So I'm just showing my boss or my client, what would EBITDA net income look like under a base case set of assumptions, under the best case, under the worst case. But this is just an example of what you might include. So if I was to go, and I do want to show you one nice little tip. Sometimes on the cover, it's nice to include a date. And you can see here that I have today's date, July 9th. And if tomorrow, it's going to update automatically. So let's go back and just spend another moment on some notes for on a cover page, things to include are name, logo, maybe a version, a date, your name, whatever you like, make it clean, make it nice. But I will tell you, if you want to automate the date in Excel, there are only 2 ways. There are only 2 ways in Excel to automate a date. Most people know this one. You can use a formula that says equals today. In Excel, there's a formula that says equals today. I'll show you here. Equals today. We'll pull up today's date. This is called a volatile function in Excel because it will change automatically. But there's another way that people often have not heard about, and that's called equals now. What that does is also shows the time. The now function will also show you, it shows you the date, but it will also, as I said, show you, shows date and the time. So that's what's nice on a cover page, on an executive summary. Here's the most important thing to put on your executive summary. Okay, should include whatever your boss or client needs to see in order to make a decision. That's what belongs on the cover page. So examples might include NPVs if you're doing evaluation work, IRRs if it's an infrastructure project, debt ratios if you're trying to do some debt sculpting or you're looking at credit evaluation, EBITDA, margins, whatever, etc. The only thing that belongs on the summary page is whatever you need to help make the decision for your model. That all comes out of the planning stage. So thank you for asking. I'm gonna go back in because I've got another 20 minutes and I wanna finish up the next 5 or 6 tips here. The next one is critical. 5, and we've got enough time in 20 minutes to finish this off. Tip number 5 says, build a scenarios page. And I'm gonna show that to you. This might be the most important page in the model. It might be the most important page in the entire model, and I'm gonna go back up to my notes. I'm gonna send out these notes as well, guys. So when you get the model from CFA Society, I'm also going to include the notes. And one thing you might have noticed is I told you that a good order for a model is a cover, an executive summary, and then assumptions. Well, the next thing I would say that you want to include is a scenarios page. And I'm going to show this to you in the model right here. I'm going to go back in and reshare the model. And you can see here that there's a separate tab. It's so important. We have a separate tab called scenarios. And what this is if I go down the scenario page, it says economic and pricing scenarios. I have 4 variables: cost inflation, sales. Imagine this is an oil and gas company. Sales prices, although wouldn't this be nice if this was the price of oil? Yeah, not exactly, yeah. But imagine that we have cost inflation, selling price, sales volume. I have a few variables on this page. So what exactly is going on this particular scenario page? Well, let me go back to my notes and tell you that the scenario page, I'm going to insert some rows. The scenario page is just, all this is more assumptions. That's it. This page is another page of assumptions. But what you notice differently in our sample model, in the sample model I just showed you, what were the assumption variables? Well, it was things like cost inflation. It was things like sales prices, right? i.e., you know, price of oil or the price of gold. So what do you notice about these particular assumptions? Well, these particular assumptions are the key drivers. These are the ones that are hard to forecast and hard to control. So what we did differently on this page is we therefore have, the scenarios means we have a few cases, right? A few options. I had in my model a base case, a best case, and a worst case. And I showed you. Because I don't know exactly what the price of oil is going to be for the next 5 years. So a scenario page allows me to have more than one option. I can have a base case option, a best case, and a worst case option. And I can play with the model. Let's go back to the model for a second. I'm going to show you what it looks like. So if we see the model here, and again, guys, just in the interest of time, I'm going to quickly show you this page, but do yourself a favor when the course is over, when this day is over, go look at the scenario page and look at how we built it up. It's very simple. I want you to see it because every single model that you ever build can benefit from a scenario page. every single model that we would ever build includes a scenario page. And I'm going to show you exactly what this means. So there are 3 steps to build a scenario page. There are 3 steps to make a scenario page. Step 1 is to create this large box. Does everyone see? There's always a large box that has 3 rows, just like this. My base case, my best, and my worst for cost inflation. If I go down to my selling price, again, 3 rows, a base, a best, and a worst. Again, sales volume. I don't know exactly what my selling volume is going to be. I have 3 options. So the first step in building a scenario page is to make this large box. Well, you should already know what the large box is because there's a hint. The numbers are blue. What that means is that these are assumptions. They're assumptions, and that's why they are blue. You need to talk to your boss, talk to your client, and say, what do we think cost inflation is going to be under our base case, or the best case, or the worst case? Or the price of oil. What do we think the price of oil will be? Base case, best, worst. And then you just enter them in as blue inputs. Very simple. The next thing you need to do, I'm going to move this out of the way. The next thing you need to do to build this page is have one cell that's your switch. This is my switch. It tells me which version of the model am I going to run right now. Am I going to run the base, the best, or the worst? If I have a 1 in here, you can see the skinny row is the live case. This is the one running in the model. Right? The skinny one is the live case. I'll put a note here that says this is the one running in the model. So right now, my model is running the base case because there's a 1 here. If I put a 2 in this cell, it will run the best case. You can see now the model is going to be linking to and picking up the best case. And if I have a 3 in here, my switch, the model will run the worst case. So then, of course, the question is, how do I build a formula in this skinny row to figure out which case I should run? The only thing that's happening in my skinny row here is the skinny row is looking at my switch, and depending on what's in my switch, it's pulling out one of these options, either the base or the best or the worst. That's all it's doing. So how do we build it? What most people will do is use an if statement. This is not the best. It's not optimal. Most people will build an if. If you've never used an if before, that's fine. You can try it on your own, but this is not optimal. What they'll say is if my switch has a 1, if that's equal to a 1, then click on the base case. Otherwise, if the switch is equal to a 2, you get the idea. If that is equal to a 2, then run the best. If you've ever seen really long formulas in your models, it might be because of a long nested if statement. So we try to avoid long nested if statements because they're hard to read and hard to understand. They get very hard to audit and hard to check. So what do we recommend instead? In the slides that I'm in the slide deck, there's a page in the slide deck that you're going to get after this that shows you a much more elegant tool. And this is one of our favorites in Excel because it's so simple, and it's Excel's choose function. It's really simple, very elegant. All it does is it says, where's the switch? So I've said, where is my switch? It's D6. And then where are my choices? Oops, sorry about that. And then where are my choices? You can see the model still, Julian, we're good? Thumbs up there. We're, yeah, okay. So where's the switch? And then where are my 3 options? And you can see right underneath, the way it works is if this switch D6 has a 1, then the choose will pull out the next item in your formula, which happens to be my base case. If the switch contains a 2, it will pull the second option, the best. And if the switch has a 3, it will pull out the worst option, the third. So it's very, very simple. Clients love it because they understand it and they can make sense of it. It's not a complex function. If I had, some of you might be wondering, what if we had 20 options, 20 cases? Personally, I think that's a lot of cases, but let's say you did. If you had 20 cases, then I might not use the choose. I might use a more complex function like an index function or an offset. But in most models we've ever seen, people have 3 or 4 or 5 cases, and then this is a beautiful tool to run it and to pick. I'm not going to have a time to show you this drop down, but I want you to be aware of this. The last thing that I want you to see is I don't want to leave my switch exposed. I don't want to leave this number switch just sitting here, because if I emailed this to David, let's say David was my boss, David Brown, and I emailed him my model, David might say, Ian, what does this mean? Why is there a 1 here? It's not obvious why that's a 1. Or David might not know what he has to put in there. He doesn't know if he should put in a 1, a 2, a 3, a 4, a 5. It's going to confuse people. So what we do instead is we include a drop down. This is a really great feature in Excel. There is a slide in the presentations I'm going to show you on how to build this. It's really simple, but the message is you go to your developer tab. If you don't have a developer tab, some of you might be thinking, wait a second, Ian, I don't even have a developer tab. If you don't have a developer tab, it's because Microsoft likes to hide it. So if you don't have a developer tab in your Excel, first you have to go to the File menu. Look where I am, just watch carefully. You need to go to your File menu and then down to Options, File Options, and then you can go to your Customize ribbon. And when you go Customize ribbon, you will see an option that says Developer. If that's off, you must turn it on. So put a check mark in there, turn it on, and then you will magically get a new menu in Excel called Developer. And if you go to the Insert menu now, under the Form Controls, you will see an option that says Combo Box. You see where I am? And that allows you to build a little drop down. You just draw one and then you set it up. I promise you that you're going to see it in the model, and you're going to see a slide in our presentation on step-by-step instruction on how to build this. Because we're short on time, if you can't figure it out, I'm sure you will, but if you have a question, just email us, email me, and we'll make sure you know how to build it. But the point is, it's a very simple tool, and the reason it's so nice is because now if I email my model to David Brown, he doesn't have to worry about what the number means. It feels like a user control. The only thing David has to do is says, look at this nice model Ian built, and there's a switch, and he can choose the base, the best, or the worst, and it will run the model. So there's no macros, there's no VBA. It's a very simple user control that many people don't know about, but it allows you to control the model. So I would encourage you guys, all your models, build a cover, a summary, an assumption tab, and a scenarios tab. Which leads me to the last few tips of the presentation, which we'll do quickly. Are we back on the best practices tips here, Julian? We're good to go? Okay, thank you. The last ones we're going to do very quickly, and we can do them quickly. There are 2 major approaches to building models. There are 2 major approaches for tab structure. And I will tell you what the 2 major ones are. There are 2 major approaches for tab structure in models. And what we will say is that they are vertical. People either build their models vertically or horizontally. And the one I'm showing you today is a vertical model. A vertical model means that many of the pages are stacked vertically, right? Should sound obvious. So if I go back to the model for a second, this is what it means. A vertical model means that many of the pieces, like the revenues, are on the model tab. And then when I go down, I have costs underneath it. And then as I roll down, the income statement is underneath it. That's not always obvious to people, but what it does is it keeps your formulas very, very simple. Because everything stays contained on the same sheet. And one of the big reasons why models often people get in trouble with models is when you have too many tabs, all your formulas have to link back and forth between the tabs, and it gets very difficult to figure out. I'm sure you guys have seen, has anyone ever seen a formula that look what I'm gonna do. Has anybody ever seen a formula that looks something like this? I'm gonna make up a nonsense formula, but just watch this carefully. Have you ever seen a formula that says something like equals, and then it's linking to a number on one sheet, and it's multiplying by a number on another sheet, and then it's dividing by a number on a third sheet? I'm just, this is nonsense, but I'm just, I'm just showing you what this looks like. And then I'm adding in a number on a fourth sheet. Who cares? I'm making up a number here. My point is, have you ever seen a formula that looks like this? I'm linking to 4 different sheets in one formula. Believe it or not, we should never do that. It makes it very, very difficult to audit, to check. If David's my boss, David's going to be very upset with me because he's going to have a very hard time understanding what I'm doing. And we find that this often happens when people have too many tabs. So we want to keep our tab numbers manageable so that our formulas can stay simple. I'm going to leave that formula here on the screen. And what I would say is try to have a minimize. We saw a model recently that had 113 tabs, and it was impossible to work with. The client found it impossible because there were just too many tabs to work with. And I'm sure you've all seen that. So to have a manageable number of tabs in your model, maybe that's 5 or 10. But if you have 20 or 30 or 40 tabs in your model, that's going to be too many. It's going to be very difficult to work with your model. And we talked, so I said this, try to have a manageable number of tabs is 0.6. Here's another critical takeaway. One of the biggest errors we ever see is this. 0.7 and 8 go together. Actually, all of these go together, but let's go with 7 and 8, and then 9 and 10. And you're gonna see this, you're gonna get this, guys, after. You'll read them on your own. 0.7 says, do not build any formulas on your financial statements. And I truly mean never. It doesn't matter how complex the model is. Even in a more complex infrastructure model, never build any giant formulas right on the financial statements. So what am I talking about? That's 0.7. If I go back to the model, take a look. If I roll down to my income statement, the only thing I want to see on my income statement, if I click on revenue, does everyone see I've got a revenue line? I never want to click here and see a big giant revenue formula. The only thing here is a link. Look how simple that is. What about my cost of goods sold? I do not want to see a big formula in my cost of goods sold. It's just a link. What about depreciation? I don't want to see a big depreciation calculation. What's in here? It's just a link. Well, then the question you're all wondering is, well, where are you linking it to? Well, tip number 8, point number 8 on my top 10 list said, build schedules. So the nicest way to build a model in a clean, simple way is never do your work on the financial statements. What we do instead is we build schedules for every part of the model. So at the top, I have a revenue schedule. My revenue schedule lays out row by row. What's my pricing? If this is an oil and gas company, what do we think pricing will be for this company? What are the volumes going to be? And then we build up to revenue. The revenue is simple. The revenue, of course, is price times volume. Maybe you guys are thinking, well, maybe you're thinking that the companies you model have many products. Sure, I'm sure they do. All it means is you do this more times. Your revenue schedule might be very long. Sometimes a revenue schedule could be 100 rows, a couple hundred rows. That's fine. But the ideas are simple. You build up your revenues one piece at a time. And my point here is that when you get to the income statement, there is no big formula. It's just a link to the schedule. Same thing, cost of goods sold. Never build a formula for cost of goods sold on the income statement. It's just a link. Where's that linking to? Right above me. And look how nice it is because my model stays vertical. It's directly on top of me, linking to this cell. This is the bottom of the cost schedule. There's a cost schedule and I'm linking to that. So every single line on my financial statements is a link. So where is my depreciation linking to? Well, that must be underneath me, a depreciation schedule. Same thing with interest. Same thing with income tax. Guys, I really encourage you, when you see this model, when you get it afterwards, look at this carefully. See the simplicity of the links. You will never see a big formula on our financial statements, but I promise you, your boss will love this because it's very easy for them to follow the logic and understand what you're doing. So that was point 7 and 8. Point 7 and 8, and I apologize. Again, if someone has to drop off now, go ahead. I have about 3 to 5 minutes left, and then we will end. If I go back to my notes, I said, don't do your work on the financial statements, do them on schedules. And then the last thing is 9 and 10, which I can do quickly. How do we keep it simple? We're on, Julian, are we on my top 10 tip here? You can see this. Yeah, we're good. Excellent. So then the last 2 tips say build simple formulas. And how do we build simple formulas? We repeat the data. So let's go back to the last 2 things here. I actually already showed this to you. I never want to see a formula that looks like the silly one I built. Never. I never want to look at your model and see something like this. That's going to be very difficult for me to understand. What would I have to do? What do I have to do now? If you built this, guys, and you emailed me, you're forcing me to go back to this page and figure out what that number is. And then I have to go back to this page and figure out what that one is. And then I have to go to this page and figure out what that is. If you build hundreds of formulas like that, it's going to be impossible for me to understand what you did. What did we do? What's a better way? What I did is I repeated. If I want to build up a formula, I first repeat. Look at this. I have repeated my scenario. I repeat one value. I repeat another one. It's just a simple link. And now my formula is simple. Look how simple this formula is. I'm taking last year's number. Don't worry exactly what I'm doing, but my point is it's understandable. You see, I took a number last year and I'm multiplying it by a value that's right above me. Same thing here, a simple formula. Every single cell here is either a link to an assumption, or a simple formula, David Brown is going to understand this formula because it's simple. So what did I do? I repeated my assumptions and then I built a simple formula. So as an example, if you need this calculation, if you actually had to do this, I would never build it that way. What I would do is I would first add a bunch of rows. By the way, rows are free. You don't pay for your rows in a spreadsheet. You can add as many as you want. So if I had to build this formula here, what I would do instead is this. Let me show you in 2 options. Here's option 1, a crazy link to 4 different cells. What I would do again, this is still a silly formula, but what we would do when we teach and we look at modeling is I would first repeat the first variable that I need, and then I would label it. So I would label whatever that is, I would relabel that value. It's nonsense, but I would relabel that value here. And then I would have the second one and I would put that in its own cell like this. And I would label that. And then I would put the third one. You can see what I'm doing here, I hope, very easily. And I would do that. And I would relabel that one. And then the fourth one. And then my formula would be to do this. Take the first one, multiply by the second one, divide by the third one, and add in the fourth one. You can see I have the same answer. Is David Brown going to be happier if he has to look at hundreds of formulas like this? Or is David Brown going to be happier if he looks at a link, a link, a link? Each one is labeled. And then when he gets the formula, it looks like that. Everything he needs is right there. So when you go through the model, you'll see that that's how we've built it up. So I've gotten to the end here. What I'm going to suggest is as follows. If you have questions and want to stick around, I think we can do a few minutes of questions, but I'm going to go back to the notes. I knew this would be quick, which is why I said earlier, I really encourage you to watch this again. I encourage you to play with the model when you get it. And I encourage you to look at these takeaways. I promise you, I've been teaching modeling for many, many years. I promise you, if you can leave this 1 hour session and you can think about these 10 ideas, and you can do your best to incorporate these ideas into your models, I promise you, your models are going to be cleaner, stronger, more effective, and create a lot more confidence than they ever would have if you didn't. So guys, I really hope that helps. I know we move quickly here, but I hope it makes sense. I really want to thank you all for your time. I really enjoyed being with you, packed a lot of stuff in, but that's why we're giving you some resources after. If you have to drop off, again, totally understand, but if you do want to stick around, I'm more than happy to stick around for a few questions. So I'm going to actually turn it over back to both my colleague Julian and David to see if you guys have any questions or thoughts that we can address here for a few minutes before we let everyone move off into your afternoon.
Thanks a lot. Thanks, Ian. That was super. That was excellent. I have a quick question straight up from Arslan. What are your views on the modeling time, monthly, quarterly, semi-annual, or annual, in case of energy projects supported by public-private partnership?
Yeah, well, that's an excellent question. So it's an excellent question. It's an excellent question. There's a word for that we use in modeling, and it's called the periodicity. It's called the periodicity, and the periodicity means what's the right timing that I need in the model. And I'm going to tell you, there's no right answer. There's no right answer. The right answer is, back to a point that I made. Julian, are we on my notes here? You can see this. The right answer is, what's the right period of time that you need in order to make a decision? So one of the critical assumptions that you should think about when you're making your model is, what's the correct periodicity? Meaning, do I need monthly? Do I need quarterly? You will surely need annual. All models have annuals, but do you need monthly and quarterly? I will tell you, we have seen so many models where people built in a monthly forecast or a quarterly forecast, and whoever's asked the question knows, as soon as you add in monthly and quarterly, the model gets much bigger because now you have dozens and dozens of columns. The model gets slower. We have seen so many models where people build in monthly and quarterly and then they never use it. The reason, they thought they might need it, but then they didn't. If you need monthly or quarterly modeling to make a decision, then you need it. So for instance, if it's an infrastructure project and you need to be able to sculpt your debt on a monthly or quarterly basis, and you have to show the regulator some results on a quarterly or monthly basis, then absolutely, you're going to need monthly or quarterly models. If it is, but if you're simply building a model to do a valuation, if you're looking to do a private equity situation, or you're just building a model to look at a value of a company, you might not need it. So every situation requires different periodicity. I do want to give you one tip though. I want to give you one great tip. I think if you need multiple time periods in a model, there's a good way and a bad way. If you need a period, if you need to have multiple periods in a model, I'm going to tell you what we see. Maybe you can relate to this, guys. This is going to be a challenging way to do it, but this is what people do. Can you guys relate to this? Imagine you had to build a imagine your boss said, we need a quarterly model. And you said, okay, by the way, whenever a client says to me, I need a monthly or a quarterly model, do you know the first thing I always do is I will say to them, are you sure? I will challenge that assumption every single time because I want to make sure that we actually need that for this particular model. Only because if you build in as I said, if you build a monthly or quarterly model and then you don't need it, it just becomes clunky. There's more risk of error. But if you do really need a monthly or quarterly model, this is the challenging way when people do this. Has anyone ever seen this before, guys? A model that says Q1, Q2, Q3, Q4, and then David, what's the
total, and then total at the end. Terrible.
Annual. Has anyone ever seen this before? And then you do Q1, 2, 3, 4 annual. Q1, 2, 3, 4 annual. Can I tell you something? This is a disaster. And I would encourage you, if you have to build a quarterly or a monthly model, Do not do this. Can I show you what I've seen? This is going to make many of you very uncomfortable, but what I've seen is people will say January, then they'll do February, then they'll do March, and then they'll do Q1, and then they'll do April, and then they'll do May, and then they'll have Q2, and then annual. Why is this a disaster? It's a disaster because you have different formulas in different columns. You can't just copy all the way across. These quarterly formulas are doing something, and then the annual one has to be like a sum of these ones. It's very challenging when your columns have different formulas. We always find mistakes in models when people do this. So what is an optimal way? If you need multiple periods, what I would say that the more optimal way to model it is this: Q1, 2, 3, 4, 1, 2, 3, 4, 1, 2, 3, 4, or January, February, March, and then, you know, April, and then May. So what I mean is only have the quarters in one spot. And then what I would say is then off to the right or on a different sheet, have all the annuals. Typo here, all the annual columns. You need to keep periodicity together. And I know it sounds obvious, but it's not what people do. Most of the time, if people are not thinking carefully about it, they'll do this. That always comes back to haunt you. And it's very hard to change it. If you build a big model this way, and then you realize, oh man, that's terrible. That's a disaster. It's very hard to go back and fix it. It's like doing surgery and really hard to fix it later. So I hope that answers your question. Your job as a model builder is ask good questions. Find out the right periodicity you need to make the right decision. If you need monthly or quarterly, then you have to do it. But don't just do it because someone says it. Make sure you really need it. And then if you're going to do it, build it in a way that's optimal to keep your model clean and simple. So it's a great question. Love the question.
Great question. Yeah. So I don't know if you have time for just one last one. And
I have time. I have time. I'm okay for time. It's only early in the morning here, so I'm good.
There's still 260 people waiting. So that's amazing.
Let's do 260 questions then before we leave.
That's great. I like that too. So Sadat asks, what is the best practice where the model Excel file becomes too large? Is splitting in multiple files okay? So I have an idea around that too, but yeah.
You probably have an idea too. Well, what I will tell you is this. So I think you're talking about a couple things. You're talking about file size. You're talking about file bloat. We call this bloat. When a model gets too big. As I would say, as a rule of thumb, models are hard to work with when they're more than 10 megabytes, but that's huge. Models are hard to use when more than, let's say, 10 megabytes. But that's giant. That is giant. And I will tell you that if your model is anywhere close to that, if your model is anywhere close to 10 megabytes, you may be dealing with file bloat. Yep. There are lots of reasons, guys. I don't have time to cover it today. We actually have a presentation on the top 10 tips to get rid of model bloat, which is ways to get rid of garbage. Very often when a client sends us a model or we look at a model that's really big, we can usually discover that there's a bunch of stuff, Excel garbage, that is making the file really big, and we can clean it up. If someone's interested, I can maybe send you our list of things to check. Examples: if you have lots of external links, if you have some old names or macros or graphs or visuals, that can often make the model get huge in size, even if you're not using those things. We have built some huge models of massive companies that have tens of thousands of rows, and they're still in one file, and they are less than 10 megabytes. So strong recommendation to, that's a terrible spelling, but strong recommendation to keep a model in one Excel file. It is not ideal. It's not ideal to link between Excel files. You all know that it's possible. You can link one Excel file to another. We see so many errors when people do that, because if you have multiple files linked together, you have to make sure all of them are open all the time, because if you make a change on one and the other one's not open, it might not properly pull the correct links anymore. And then if you email one file to somebody else, they might not be able to work with it if you did not send them the other files. So many people over the years have become frustrated with models, and they abandon their models because of external links. So two tips on that. If your model is really huge, you're welcome to email it to us if you want. But if your model is really huge, more than 10 megabytes, there's a very good chance that there is some garbage. And if we take out the garbage, the same model will be, I can tell you, we have looked at models that are 30 megabytes, 30. The client didn't realize that there was some garbage. We took out the garbage and the model dropped to like 5 megabytes or 4 megabytes and nothing changed, but there was some junk. So that's one thing to think about. Do you have bloat in your file? And secondly, I would really encourage you to keep everything in one Excel file to minimize the chance of errors. So I don't know if you want to add to that, David, but that's something that we have found by looking at thousands of models that helps.
Yeah, definitely. That's it. So it's really model bloat, and most of the model bloat is based on formatting. So it's just formatting. You wipe out some formatting. If I highlight columns at the end and just delete, you think they're empty, but no, they have some funny stuff in there, and they will really reduce it. So I agree with you 100%, because I built a model that has hundreds, like a group model with 100 companies in the same model, and it's less than 10 megabytes.
That's right.
Yeah,
Thank you.
so, yeah.
I didn't even pay him to say that, but that is exactly right. You can put a lot of stuff. You can put a lot of stuff in a model and keep it under 10 megabytes. So yes, there are some tips. Formatting is one of them to clean stuff up. Did you want to do a couple more questions here?
Okay, let me check. I can see.
Julian, do you have any that might be helpful or topical?
Yes, I do. So a candidate has just asked, does the define name function for input affect the model size?
So does define naming? I think a little bit. I don't think it has a huge impact, but what I will tell you is that when you go into the name manager, I hope you can see it in the name manager here, which is Control F3, pops that open. Sometimes you'll go in a model and you will see dozens and dozens and dozens of, I have actually looked at models that have hundreds of old names. And if you don't know what that means, it just means that you can name a cell. So if I have some cells here, by default, a cell's name is its address. So this is the address, D113, that's its name. I could change it. I'll name that one David. Here we go. So that's now David. So that cell is no longer D113. Look what I have. I have D112. There's David. And if I go down here, I could name this one Ian. So people do this sometimes because now if I build a formula, I can say, what happens if you add together David? There's David. And if I start typing equals DAV, I can say, what do you get if you add up? It almost sounds like a joke, right, David? What do you get if you add up David and Ian? So now these names are here. If you add up David and Ian, you get 81. What does that mean? I don't know. Some people like doing this because they think it's easier to read. And I don't have a strong view. We don't do a lot of naming in our own modeling because we repeat data. What you'll find is if you repeat every single assumption and you build little formulas like I showed you at the very end of the presentation, I think you'll find you don't really need it. But if I go back into my name manager, Control F3, now you see I have two names here. Somebody asked if it creates a lot of extra bloat. These two names will not create a lot of extra size, but some people have names that refer to huge formulas, and they'll put a giant formula like an offset or an index right in here. If you have hundreds like that, then yes, it will definitely
add a lot of processing capacity if it's looking at lots and lots of things. So it's one of the areas we look at when we try to reduce file size, is we look at the name manager. And if there's a lot of garbage names, we'll take them out and the file gets smaller. Yeah, good question.
If I could add to that. So what I see is some models, some people prefer to name the entire row. So you name the entire row, you name it revenue, you name cost of sales, and then you go into profit, gross profit, and say equals to revenue minus cost of sales. To me, that's terrible use of names. Just like Ian said, you shouldn't do that. And the only good use I see for names is to simplify your macros. So sometimes you need to build, and I always say, don't build VBA, don't write VBA if you don't need to, but it will simplify some of those coding. And then, and what I also have as some best practice, Ian, it'd be nice to get your opinion on this, is I use, if there's a single cell that contains something so important that's used nearly everywhere, then we could give it a name, a descriptive name,
sure.
and then use it everywhere else. But then you need a naming convention. So get a naming convention for how you name, right? So, and
why don't I just do a very quick demo and show people what you're talking about? So and by the way, David said this is a terrible use of names. I don't feel quite as strongly about that. We don't do it. We don't do it. What he means is this: you could take these 4 cells. I could name this. You know, I could go in and very quickly could select these 4 cells. Oops, and I could name these. I could name this here. If I create a new name, I could name this revenue. I'll just call it REV. And there we go. I've got a new name called revenue. I could then select these 4. It's just not necessary. It's not necessary to do this. If I click on new, I could name these costs. So now I have 2 new names. These 4 cells are named revenue. You can see up in the top, it says rev. And these 4 cells are named costs. So now if I want to get to, let's say, EBT, earnings before tax, I can say equals revenue minus costs. And what it will do is it will, and it's in a new version of Excel, it has spilled it. So it is taking revenue minus costs all the way across. And so it's applying the name and copying it. You can see in my formula bar, the names revenue minus cost. I never do this. I don't think it's necessary. But what David mentioned that I do agree, this is fine. If you want to name your tax rate, I can go in here. I can also just type in tax rate like that. And now I can have income taxes. I could make my income taxes. I can simply take that cell and multiply it by tax rate. If I say take my earnings times the tax rate, some people think it's a little bit easier to read because now I can say, oh yeah, I'm multiplying it by the tax rate. Again, I don't do this in our models because we first repeat all the assumptions.
Yeah, definitely you repeat. Yeah.
There's nothing wrong with this. The only caution is if you find there are dozens and dozens of names, it can get very confusing. So we minimize names, yeah. Should we do one or 2 more while there's still a lot of people on? So again,
so what we could do, I think I don't know if there's any more. So the naming thing, still back to the naming thing, 100% like tax rate, you should just repeat them, have a row of tax rate. So what I really use names for scenario analysis.
Right.
So when I'm creating scenarios, I use the name to name the list and the switch. So have this methodology where you're naming the list and then naming a single cell switch. And you use index, list, switch. It's just a framework. So index, the list, and the switch. Index, list, comma, switch. And it pulls whatever you need out. So that's just to simplify as much as it make it simple and make it easy to understand. Otherwise, don't use it. Yeah.
Do we do, why don't we do one more and then I'll let people go. I mean, we still have a couple hundred people, which is awesome. To all of you, hey, to all of you hardcore modelers out there, I applaud you. And
yeah, I'm amazed. It's still 200.
I mean, I guess you can tell from our excitement and passion. I mean, we could talk about modeling for literally hours. There's so much to discuss. But that's part of why we created the FMI, to make sure people truly understand and have, understand and how to use all these ideas. Should we do one more?
So there's a question that says, Could you discuss the skills to check a financial model section a little bit? I don't know what that means. A financial model
Yeah,
section.
sure.
It
Yeah.
was the seminar agenda, but obviously we can't go over it
Right.
completely. Okay.
Sure. Let me show you a couple then. What I'm going to do, I included some slides, and I again apologize. We had a bit of a delayed start, so I included some stuff in here. Can you see my slides, Julian? Are we good on that?
Yeah, we can see.
Why don't I do this? Why don't I end by showing you a couple of my favorite tips? They're all here, guys, so you can check them. Page 17 of the slides, you're going to get it, has my favorite tips to check a model. And I'm going to show you a couple very quickly, and then we'll wrap it up. And then you can look at these on your own, but a couple great ways to check a model to make sure that it's working and that there's no hidden time bombs or errors in the model. So I'm gonna go back to my model here. Let me change my control. So again, check out this page. And then again, and by the way, guys, if something doesn't make sense, as I said already, just email me, and we're happy to address your questions and talk about them after. What do we do? Let me get rid of some stuff here. Can we see the model here, Julian? Are we good? We're seeing the model? Okay, excellent. So let me get rid of this stuff. Imagine that whoever asked the question about checking, imagine please that you emailed me the model and I want to check it. How difficult would it be to do this? Can you imagine how painful it would be? And this is actually a pretty small model. Can you imagine how painful it would be to check the model by me going to every single cell? It's not possible. Can you actually do this? Say, yep, that looks good. Yep, that looks good. Yep. You cannot go and check a model by checking every single cell. It's too time consuming. So there's some really great skills we look at. One of the things that I like to look at all the time is, did somebody override a formula? As an example, does everyone see here that this is a formula that takes my gross price? Don't worry about what it's doing, but I have a formula here. It's taking one minus the other. And my net selling price, my net price of, let's say, oil or my product is $7.50. What if my boss said to me, hey, Ian, what happens if the model is running at $850? My boss might say, Ian, run the model if this is at $850, not $750. I might be tempted to do this. Has anyone ever done this? You can raise your hand to yourself if you've ever done this, if you've ever typed in a dead number like that right in the model. So now I've typed in 850. It's going to run through, but now, of course, I've destroyed my whole model because it's not linking anymore. I have a dead number. So one of the things I like to do when I check a model is I have to see, are there any dead numbers like that that I need to know about? There's a really, really great skill in Excel to look for dead numbers. And you're going to press the F5 key on the keyboard. F5 opens up the go-to menu. So F5, if that didn't work, guys, if F5 didn't work, it might be Control and the letter G. So Control G opens up go-to. So everybody knows this. Everybody knows that there's a go-to screen that says go-to. What you might not have seen before is that there's a button called special. This means you can go to some special places. I don't know why the people at Microsoft called them special, but watch this. If you say go-to and then special, you can click on an option that says constants. If you say go-to, special, constants, and you click OK, then look what it does. It's amazing. It highlights every single cell in the entire model that was entered as an input. I'm going to look, this is okay because these two are historical. That's okay. But I'm going to have a heart attack when I see that this number here is lighting up. That's not supposed to light up. That's supposed to be a formula because it's in the future. But I now know that if someone built this, they typed it in as a hard number. And if I scroll down, I can look and see, did anybody type in a number when there should have been a formula? Now I can go here and say, oh my gosh, look what they did. They typed it in. And I can now go back and copy and I can fix it. So that's a really, really great skill to check for dead numbers. You will find that. Let me show you one last tip and then we'll end it up here right on the hour. So that found this. That found my error if you type in a dead number. But what if somebody did something else? What if
I was using the model and I said one minus the other, and then I added in a number 50. Okay, what if that's a hard code. I put in a number at the end that says 50. That's also a big problem. That's also a big problem because I don't know that it's there. Now you might notice that there's a green flag. People don't find these green flags very effective because sometimes you might have lots of green flags. Some people turn them off. In fact, honestly, I find that they can get so annoying. A lot of model builders I know turn these green flags off because when it's on, they might light everything up. Everything might have a green flag and it might not be helpful. So I'm actually going to go to the File Options menu. I'm going to show you under Options how you can turn it off. You go under Formulas. Under the Excel Options Formulas, most people that I know like to keep it off. Error checking, and you turn it off and you click OK. Now it's gone. Because again, if you turn it on, you're going to find that there's lots of green flags and it's still not helpful. There's a better way. Look what I can do. If I ever notice, let's say I notice that this formula is a good formula, okay? This is a good formula. I should not have to check every single one. It's too many. What I want to know is this. If I like the first one, are the rest of them exactly the same? Because if I like the first one and then the model builder copied it, and if they're all the same, then obviously I'm going to like all of them. They're all going to be okay. Well, there's a great keyboard shortcut here that says if you select the entire range and then you press Control, it's this one. It's going to be Control key. It's the Control and then the backslash. Now that might not work on your keyboards, guys, in Nigeria. But what happens is if I select a formula and I like it, and look what I do. I press this keyboard shortcut, Control backslash. Look what happens. What it does is it stops at the one that's different. It realizes that this one is different than the first one. So my first one was that. It realized that this is different. And now I can go say, oh my gosh, what's going on here? Somebody put a dead number at the end. Look, even if there was two of them like that, imagine someone put a dead number here, also 5. If I like the first one and I select the whole row and I press Control backslash, it stops on both of them. And I can say, wow, that is 2 errors that I need to fix. Why am I showing you these tips? Because these are 2 of the biggest errors people make in models. They have dead numbers or they have numbers at the back of a formula. Now watch, I just fixed it. So now if I like the first one and I select the whole row and I do this Control backslash, it says no cells found. That's perfect, that's good. It means all the formulas are exactly the same as the first one. There are no inconsistencies. And just last, if this keyboard shortcut is not working for you, you can also use this tool by going back into the Go-To menu that I showed you a minute ago. Watch this. If you go to, and then you go Special, you can do this. You can say, look for row differences. It's a little more time consuming because you have to do it with a couple steps, but the feature still works. Use this to check your models. Look for row differences. And if you click OK, it says no cells found. Again, if I had a dead number at the end, like 50, and I did it from that menu, if I go back into my Go-To menu and I say Special row differences and click OK, it will stop on it. Use this, guys. Use these 2 techniques. There are other ones. I'm going to go back. I'm going to wrap up the session right here. Can you see my screen here, Julian? And back to PowerPoint. Yep. Look at these tips. If they don't make sense, email me. But I pointed out a couple of the more important ones. I promise you, you will find some issues with your models if you use these tips. So I'd like to formally end it because I know some of you got to go, but I'm so impressed that a couple hundred people are still on. You know, as you can tell, I love talking about modeling. As I said to start the day, it is it's maybe the most important skill in the world of finance. If you've got strong modeling skills, they will stay with you forever. They will help you in any business job you ever take. They will show that you have a great skill to think about a company, to analyze a company, to tell a story, and you will be way ahead of most other people because most models are not very good. So I really encourage you to go back through the tips that I showed you. think about the issues, use those issues in your own models. And if you, try and build your modeling capability. If you have questions, feel free to reach out. Would love to hear from you. Would love to see you at the FMI. And if you want to prove your skills, to try the first level of the exam. Again, David is a great guy to help with that because he's an approved training provider. There are a whole bunch. This is a list of all the approved training providers in the world, and they have different offerings. Some have online, some have, here's David's logo. But the point is, there's a whole community in the world that's trying to help people build better skills. And I hope this was helpful today. So I'm going to leave it on the hour because I feel bad that we've already gone a little bit long over, but I love that everyone's sticking around. I don't know if anyone from the CFA Society, whether Gloria or Frank, wants to say anything before we wrap up. I want to thank you guys again. I hope to get there in person one day. I've always wanted to get to Lagos, but I'd love to see some of you in person. But is there anything else before we wrap up here then?
No, Ian, we're good. We're good. This was really lovely.
Okay. Thank you, Frank. Thank you, Gloria. Thank you. Oh, you're on mute, David. Thank you, Gloria and Frank, for coordinating. Thank you, David, for hosting. Did you want to say anything, David, before we?
I was telling Frank, he needs to write the exams as well.
Right?
Everyone should write the exams, but
Frank?
That's good. So Ian, this was wonderful. This was excellent. And I mean, as you said, we love modeling. I think it's one of the most exciting professions in the world because it's a profession that you need to sometimes be a lawyer, especially when you're in a project finance deal and you need to understand the contract. You need to be an economist sometimes when you're doing an optimization or probability and you need to kind of build a Monte Carlo. You need to be an analyst, of course. You need to be a risk analyst. Sometimes you need to be an architect. Sometimes you behave like an engineer. So what other profession does that? So yeah, I'm glad you guys like it because it's a wonderful thing to be able to be a good modeler.
I totally agree with you, David. I said earlier, it's multidisciplinary and you become the smartest person in the room about the company or the project that you're modeling if you've done a good job, because you have to think, like David just said, about all the pieces of the business. So I hope this has helped. If you have any feedback, we'd love to hear your feedback as well. But have a great rest of your day, guys. And we look forward to being in touch with some of you. Thank you so much for attending. And look forward to seeing you. So with that, Frank, I didn't know you were writing the exam coming up. That's excellent. I will personally come over.
Dave is on me for that.